Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the November 12th market update for you to use for the November 13th session. First of all, let's go ahead and start with the chart of the Dow Jones Industrial Average. As we can see here clearly on this index chart, price remains below the 50-day moving average, and the 50-day moving average remains below the 200-day moving average. I have warned you to never be long a stock market where the price is below the 50 and 200-day moving average. That has been the case all year long, and if you did not listen to me and you have been long all year long, you are now down 37% in the Dow Jones Industrial Average to go along with today's 4.73% decline. What's a little bit not great to see in today's decline, even though we are in a sub-intermediate lateral congestion pattern from October to November, volume has picked up again on the sell side, just like it did on November 6th. So even though volume was below average, it was still higher than the day before, and that's the second day in a row that volume has picked up from that level. So we've had actually 2 distribution days in a row on the Dow Jones Industrial Average. I'm just going to go ahead and go right down the line and just go ahead and talk about each index whenever I come upon it. The next one is the volatility index, the CBOE market VIX. Once again, it is trying to make that move higher. It fell right to the 50-day moving average and bounced right off of it, moving higher now at a very extremely high level of 66.46 with an intraday high of 67.19. Though that is still below the intraday high of 89.53 on October 24th, it is still extremely high and shows a high level of fear. If and when we actually do decide to have a rally, we should, even if it's a short-term rally, be able to produce a few 100, possibly 200, 300% gainers. Unless it's a new bull market, you're not going to get 500 to 2,000% gainers. And I just don't think we're going to have that right now because the economy is completely in the tank. And all the numbers that come out prove this. So I don't even want to discuss it. It's so depressing. So let's go ahead and move on. The S&P 500 next shows you the same thing as the Dow Jones Industrial Average has. It's been nothing but pain all year long, and unless you've been short and listening to me, or staying in cash, also listening to me, you're beating the market significantly. Let's see how much the S&P 500 is down since the very beginning of the year alone, 41%, and since the top in October, it is down 45% now. So, like I keep saying, if you have just a 10% loss, you should be extremely happy, pat yourself on the back, and be proud of yourself because a 10% loss is killing the market right now with a 45% decline. My worst account is down 7%. I cannot lie. I do have a loss this year. My best account is only up 25% as I've been very chicken little with my shorts. It's actually up a little bit more. I haven't checked on it today because I didn't have any covers. So I'm just going to go deal with the longs in a little bit. But bottom line is it's still a very negative market, and being short is still the only right play. The United States dollar, I showed you the flag pattern it made after getting above the 50 and 200-day moving average in August, climbing higher the whole way through, forming a flag pattern right here in October to November. It resolved itself to the upside yesterday, gaining 1.23%, and it tacked on another 0.46%. So now we have a 1.7% move in the dollar alone since the flag breakout, and since it took the 50 and 200-day moving average, the United States dollar is up 17%. God knows why I did not take that as a long and reap these rewards on the futures, but 17% in the futures market with 50 to 1 margin, if you can get it, is a nice little gain. So I kind of regret that, but that's kind of been the story all year long. It doesn't matter. I will make up for it. Now let's move on to the NASDAQ 100. As you can see, lateral congestion, but trying to move its way lower. Its volume was higher than the day before, but still well below the 50-day volume average, which does give some comfort. Let's see how much the NASDAQ 100 is down this year alone. It is now down 44% this year alone. And since the top at the beginning of November, it is now down 47%. So like I said, if you're flat for the year or down only 10%, or heck, even down 20%, you are beating the market significantly, and you will have a lot more ammo to use in the next uptrend or possibly just the next time we go short. which there is a new short tonight and one that we're adding to. Now let's just look at the NASDAQ. The NASDAQ shows the same thing. Let's just look to see how much it's down since the top at the end of October. And it is down 47.5%. So it's actually down 47.6%. I would not doubt if it's going to be down 50%, not here in the too-near distant future. So once again, reminding you, positive reinforcement. If you're flat, slightly up, or even down only 10 or even 20%, you are beating the majority of the growth mutual funds out there, and that's a positive that you need to take away from this. Now, let's look at one more thing, gold. Remember everybody telling you to buy gold earlier this year, how that was the smartest investment that you can make? Well, since March, if you went long gold, listening to all those commercials and listening to all the TV ads, you are now down 30%. And if you had, let's say, 50-to-1 margin, you are now wiped out. You don't have any more money. You're broke. Whatever you put into it, you're gone. It's bye-bye. And you now owe the broker money. So this just proves, once again, cutting losses is the most important thing you can do. And recently, right now, I only have 2 longs. It's the fewest amount of longs I've ever had since 1996. I have tried to go long 3 other stocks, but all have hit me for cut losses. However, those cut losses don't make up for the 31 stocks I'm short. And out of 31 stocks I'm short, 31 went down today. I was 31 for 31 in my shorts. I made money on every single short I was short. And the 2 longs that I have are still up significantly, but I had to cut another one. And that means that there's been 3 recent longs that have been cut. And that's why I've been saying to keep the longs extremely small, and I've been telling newbies to not even go long. And I still don't even think they should be going short, because going short is difficult. So if you're at 0% this year, you are killing the market, which is almost down 50%. I'm going to have a part 2 video for the gold and platinum members, but for right now, I'm going to go ahead and wrap it up. This is Joshua Hayes at BigWaveTrading.com saying have a good night.